Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, March 27, 2015. This week we saw quite a bit of action, especially on Wednesday when major indices sold off quite strong. In fact, most of the stock market sold off pretty strong. But for now, the major indices are holding at early March support. The small caps Russell 2000 is still outperforming the large cap indices. We saw a sell signal generated in semiconductors, ETF SMH, while the biotechs still hold on strong and there was no sell signal. Also wanted to point out that the bull market in bonds is alive and well, and TLT is still performing quite well. We'll look at gold and gold miners as they extend the bear market rally. I think there is a little bit more to run for that bear market rally. As did the oil, it rebounded this week, but then it failed on Friday. Consequently, oil-related ETF XLE generated a short signal for us, and we re-entered the market on the short side. And occasionally we take some speculative positions in high momentum stocks, and Lululemon is one of those stocks, and we did open a speculative position in it. Alright, important information. All information in this video and on MasterChartsTrading.com is for educational and entertainment purposes only and shouldn't be construed as a recommendation to buy, sell, or sell short any of the said securities. Okay, so this is a chart of S&P 500 large cap stock index. So first of all, the market is bullish, and I've shown this in the past. One of the better ways, I think, to determine if the security is bullish is to look at the 200-day exponential moving average, this in green dotted line, and to make sure that it is below the 50-day exponential moving average. So that's a very easy way to tell. So in this case, obviously, it's bullish, and the 200-day exponential moving average is pointing upwards. So you can see here this big red candlestick, which happened on Wednesday. It was quite a strong sell-off, and selling started in the morning and basically continued all day until the evening. But you can see that next day, this big hammer-like candlestick, it touched support from the early March lows, but didn't break through them. So we have a position open that we started here on the 16th. It's about -1, maybe a little bit less than 1% now, but I'm keeping it open for now because I wanted to see a close below this low from the early March, and it did not happen. So right now it's kind of like in between. We might continue lower, we might consolidate, or we might rebound. This is a bullish market, so chances are the resolution will be to the upside. Having said that, we have to be kind of cautious, and you can see that the advanced decline line actually broke below the early March low is 2896, and here it was 2894. So there is a little bit of a bearish divergence, while the advanced decline line is moving very slightly lower. The stock market is very slightly higher. So we'll see where it goes. With breadth momentum, you can see that it's sort of rolled over to the downside, and now it's kind of pointing down, moving down. Let me just update this chart, see if there's a new reading. Okay, there is no new reading yet for new highs, new lows. Anyways, so right now it's kind of in between, and basically we'll see if this support holds or not. You can see for Russell 2000 small cap index, we're not even near the support. So this strong, sell-off on Wednesday didn't even get us to the first support from early March. So obviously, Russell 2000 is significantly stronger than the large cap counterparts. And you can see the breadth momentum for Russell is still in the positive territory. Okay, and then as far as the triggers, signals that we used, our latest buy was on March 16th. I'm letting this position still open, even though I can, this, for example, here it did cross down like this, and usually that's where I close the positions. But I didn't see a conclusive breakdown, and let me go back to the S&P 500. This is kind of like a hammer candlestick, so I'm not, I want to see a breakdown below this level. It has not happened yet. As far as some of the momentum names, momentum stocks out there, so biotech, iShares, similar picture, strong breakdown, but next day we see this hollow red candle, which is means that we opened lower and then closed higher, even though we were slightly down for the day, and then next day there was a follow through with a rebound even above the 20-day exponential moving average. So this is not a conclusive breakdown, and I don't even think there was a sell signal. There was definitely no sell signal here. Conversely, if you look at SMH, Market Vector Semiconductors ETF, this Wednesday's breakdown was very conclusive, and it broke below this mid-March support, and this was definitely a sell signal for me. But look next day what happened. Once again, hollow red candle and a huge rebound today, 3.2%. I believe something to do with Intel acquiring some company, some semiconductor company. So this once again shows that there is definitely a bullish bias to the stock market and to semiconductors in particular. Next, let's look at bonds, TLT 20-year Treasury Fund. So, several weeks ago there was a bear trap, and then we did re-enter the market, I believe, somewhere around here, I believe, yeah. So once again, the reason, this is a bullish security, and it's a strongly bullish security. This is a 200-day moving average, and look how far the price went above the 200-day moving average. It was definitely overbought here, so it corrected. But this SCTR TLT, for TLT, it's above 90 again. So we're, this is a leader as far as the stock market is concerned. Here on Thursday and Wednesday and Thursday, what's interesting was that bonds also sold off together with stocks on Wednesday, and this was a little bit of a concern for me. And then especially since next day they gapped down and closed below the support. So I was worried that something is going on below the surface, and we may continue lower as in we break the support. But for now it seems that we've held on to the 20-day exponential moving average and then rebounded on Friday. And this is an inside day, so a move up or down from here may be a kind of powerful indicator which way it will go. All right, let's look at gold and the gold miners next. So gold miners, and so contrast gold miners, contrast gold to, for example, bonds. You can see that prices are moving from the lower left to the upper right. The 50-day moving average is above the 200-day exponential moving average. Now look at gold. It's almost like a mirror image. The prices are lower, moving from the upper left to the lower right, and the 50-day exponential moving average is below the 200-day exponential moving average. So this is a bearish security. And within the bearish security, there was a rebound. As a matter of fact, it cleared this first resistance and closed above it. And today it seemed like it held on, and it held on to this resistance. I think, from my previous backtesting of gold and gold miners, I think we may have a little bit more to run to the upside. Excuse me. We have a little bit more to run to the upside, and I don't have a trigger signal yet to go short. So let me show you the next chart. So this is GLD, Gold Trust iShares, Gold SPDR Gold Trust shares. So far there was no trigger signal. Like for example, right here there was a short trigger signal. Actually a very productive one, a very nice one. But so far I have not seen a good entry. It's very close. So if it has any more upside, I would be more comfortable taking the short side than right now. And plus there is no short signal right now yet. So I'm waiting for this opportunity on the short side again. As far as the gold miners, so gold miners ETF, similar picture. This is a bearish security. This is 200-day exponential moving average, 50-day exponential moving average. So 50 days below the 200-day. Within the bigger downtrend, a rebound took place from mid-March till now. This kind of looks bad. You can see that it rolled over here, but gold miners are kind of tied to gold more than anything else. So I think if gold holds on, let me go back. So if gold holds on in this area and then continues higher, gold miners will surely follow and continue higher as well. And if that happens, then again, this would be just an excellent shorting opportunity once it rolls over and the trigger signal is there. And let me show you on gold miners market timing chart. There are more signals because this is a much more volatile security than gold itself. There was a decent short signal on March 3rd right here, and it could have resulted in about 15% gain if you exited at the very bottom here. So I'm waiting once again for this blue line to cross above the green line, and that would be like a good shorting opportunity for me once the trigger signal right here actually is executed. And I will blog about this and probably issue an alert as well later on once it does occur. Okay, oil, light crude oil spot price, similar picture. I think you're kind of getting where I'm, getting the drift here. This is even more bearish security than the gold miners and gold. You can see how all of these moving averages are, and even the price is below all of the moving averages. So the same thing happened here. First there was a support break sometime in mid-March, but it didn't hold and it rebounded. So from here it staged a pretty decent bear market rally, but you can see that it keeps failing at the 50-day exponential moving average, and it looks like this is the third time it happened. So even here it closed above it on Thursday and then failed with a sizable drop today, 5%. And this could be like a bearish engulfing pattern as well, where this whole red candlestick engulfing this body of this previous candlestick here. Excuse me. Okay, next, similar picture for USO, United States Oil Fund. So we had a bullish engulfing pattern right here. You can see it better here, where you have this big white candlestick engulf the previous candlestick from here, and then it was confirmed around here, and I closed the position. I had an open position in the SCO, short crude oil fund. Now, as far as re-entering on the short side, it's possible, but it's just not for me, not an ideal place to do so. See how here this blue line crossed above the green line, and this was just an excellent shorting opportunity once the trigger signal hit. But here we were not that overbought, so I might enter it here, but I will need to look for a just a really compelling entry place. As far as the energy related sector, XLE, so similar thing, it's a bearish security, so it makes sense for me to short the rallies. And today, so see how it rebounded along with oil from the mid-March, and then closed above the, or at least attempted to close above the 50-day exponential moving average, but then it failed here. So as far as the trigger signal, today it did generate, the trigger signal was generated here. So I went ahead and opened a small, or appropriately sized rather, inverse position in XLE by I'm playing it by ERY, inverse 3 times ETF of energy, and I'm hoping for a drop to, at the very least, March lows, possibly even a breakdown and a retest of the December and January lows as well, depending on what oil does. And then finally, I wanted to show a speculative position that I will occasionally take here. So Lululemon athletic wear, it became a bullish right here with a breakout. So you can see that red line, the 50-day exponential moving average, is above the green line, and it became bullish here. So at this point, it makes sense for me to buy the dips. And you can see that SCTR, the stock charts technical rank, became also very high, above 90 here, and it continued to be above 90, till today. Basically, it's at 95. So right here, our long trigger was triggered, and we did enter the market here at 64.32. And this is it's a relatively, safe, well, low risk entry for several reasons. First, Lululemon reported results yesterday, I believe, and they were positive. And in other words, there is no upcoming earnings reports. And also, it's very close to the support from the swing, from this, swing low supports. So, it's a very low risk entry for me. Okay, that's it for this week. I wanted to show how to find us on the internet. So go to MasterChartsTrading.com. Here you can see we have a blog and a video section and the public chart page as well. If you have most of the stocks that are located, that are mentioned in this video, are located right here on the public charts page. Also, please sign up for our email mailing list, as we are about to start a trade alert service, and it will be here. We'll have at least possibly 2 or maybe more alert services soon. Also, if you have any of the following Twitter, Facebook, YouTube, or StackTweets accounts, you could find us there as well. All right, that's it for this week's recap. Thank you for listening and have another great trading week. Bye-bye.